The world is changing fast, and so are the local real estate markets. Don't worry, though. We've got you covered. Welcome to the Real Estate Revolution.
Hello, everybody. This is the Real Estate Revolution podcast. I am Kip Lohr, your host with Lohr Real Estate. And once again, we are in the Lohr Real Estate World Headquarters video and podcast studio. This is the second week we're trying to put this on video, so bear with us because it's a lot harder than it looks, folks. In the studio today is Ryan Neal. Welcome, Ryan Neal.
Thank you, Kip Lohr. Great to be here again with you all.
Yeah, so I'm excited about this week's episode because there has been some serious movement in the market just in the last week. And so today we are going to be talking about the ramifications of some of the things that we've been talking about for weeks on this podcast that are kind of coming to fruition a lot sooner than we had anticipated. And so let's start with the numbers, and then we will move on to kind of like talking about how those numbers are actually making some meaningful changes for kind of the buyer-seller dynamic right now.
Sounds great. Yeah, so let's dive right into the numbers. So as usual, we're going to start out with a weekly update on mortgage rates, where those are at right now. So 30-year fixed mortgage rates for conventional financing. Right now, we're averaging locally around 5.375%, and translating to APR, which is inclusive of all the different fees that you end up paying, which go along with the mortgage, that's at 5.47%. So we're up slightly over last week in terms of our 30-year fixed conventional mortgage rates.
Yeah, it's amazing. And, you know, in talking to lenders, both in the Eugene Springfield area and the Bend Redmond area, it is just, it's getting harder and harder for buyers to get into the game with the rates going up the way they are. But we're also seeing some interesting, difference in rates between conventional loans and some of the, FHA and VA loans. Yeah,
that's correct. So, looking at FHA and VA rates, these are actually dropping right now. So APR for both of those right now is averaging locally 5.075%. So that's about a 0.25% drop just in the past week. And we were talking with Brad Towser of Mortgage Express right before the show, asking him if he had any insight on, this disparity that we're seeing between 30-year fixed rates and these FHA, VA loans. And, what he explained to us is that in some ways, these FHA and VA loans are seen as less risky because of the requirement to have private mortgage insurance connected with them, which, that results in extra fees that you're going to be charged. So, in reality, just looking at the rates, we can't say that an FHA loan is going to be cheaper than a conventional loan, even though there's this difference in rates because of that requirement for insurance.
Yeah, that's right. And so that's the difficult part about this is that, these loans that require private mortgage insurance end up being on a monthly basis more expensive. And traditionally, we would see, particularly with an FHA loan, you'd have an ability to kind of buy your way out of mortgage insurance kind of once you had set into that 20% equity position with your home. But we're not seeing that right now. And so the end result is you may be paying a lower interest rate, but the APR, when you factor in that private mortgage insurance is probably a little bit higher anyway.
Yeah, so that's just a quick update. What's happening now with mortgage rates, and of course, that's having a big impact on the market. So Kip mentioned that we're going to go into a bit more detail about what we're seeing happening in our local Bend, Eugene, Redmond, and Springfield markets. But just to go into what we saw last week, I think we'll start with Bend.
Fair enough.
So in Bend, what we're starting to see is this huge disparity between listing activity on one hand and buyer activity on the other hand, as measured by pending sales. And again, like we were talking about last week, we don't ever want to put too much stock into what we're seeing on a week-by-week basis because there's a smaller sample size and it's natural to see a bit of give and take, just in terms of what our weekly numbers are showing. But last week, was kind of a definitive signal that something is shifting in Bend's market.
100%.
And we have some anecdotal experience to back that up in terms terms of our, working with our clients. But anyway, so in Bend last week, there were 90 listings and there were just 53 pending sales. So that's as big of a disparity as we've seen during the last 2 years, because basically, we've had extremely low inventory in all of our local markets. And in Bend, it's quite unusual basically to see that much more seller activity compared to buyer activity. So, to put these numbers a bit into context, I think we're going to go more into the context later. I think we'll save that for our main discussion.
Exactly,
but there's definitely something to see here. But there's kind of a but here. There were 44 sales that happened in the last week, and these had a whopping median of $912,500, which
that's incredible to me.
Is way higher than anything we've seen in Bend. And the median sale price is basically the middle number. So there's an equal number of sales happening below that $912,500, and there's an equal number of sales happening above it.
Right.
So I think an explanation for this is that, properties that are selling in the past week, they were kind of being listed right at the beginning of this spring buying season. When the weather did start to turn and bend, the temperature started to be less cold, more sunshine. And what it seems like happened was that there was kind of a rush on these higher end homes.
Yeah,
people
I agree
were
with that.
People were waiting, to purchase, waiting to list those homes, and all of this activity was happening, at that particular point in time. And this, this 912,500 number is a reflection of that. It's not a reflection of prices drastically increasing in Bend
for sure
across the market.
Yeah, that's right. And really for folks that are looking at these numbers on a week-to-week basis with us, it is difficult to find a through line unless you kind of watch it week to week and start seeing, the line go up or down. And so I agree with you 100%. I think we had a lot of pent up angst on the buyer side. There was just nothing to purchase in the winter. In any price point for that matter. But as we saw, the spring kind of pop open, I think you're right. I think the first wave of properties that were, coming up in Bend were definitely in that higher end range.
Yeah. So, we look at the pending sales right now. Those had a median list price of $715,000. So that number, which is going to be reflected in the sales, the sales figures in the future, is nowhere near that. So, I think since then we've seen, more activity. We've seen activity spread out across all these different segments of Bend's market. So, things are averaging out, and really, and we'll go into this further later, but really what we've seen in Bend is that prices are flattening out, that they kind of reached a peak. There's a kind of inflection point in February where we saw, quite a significant increase, but since then they've kind of been flattening out. So inventory, like I mentioned, in Bend is a little bit higher than what we saw last year. We now have 266 active properties, which is quite a significant increase, compared to what we were seeing in the winter. So buyers, particularly at certain price points, and we'll go into that later too, are seeing just more choices, less competition.
That's right.
Definitely, than even just 1 or 2 months ago.
Yeah.
So in Redmond, activity is basically kind of staying along the lines of what we were seeing last month, where what we've really seen for a number of weeks now is that lower end properties in Redmond are getting bought up pretty fast. And this is kind of going along with the trend of just prices increasing significantly in Bend, people turning to Redmond instead.
People are having to migrate from out of the Bend area.
Yeah. So right now, Redmond's inventory increasing slightly too. We have 105 active properties in Redmond. And these have a median ask price of $639,000.
In Redmond?
Redmond, yeah. So, compare that to the pending sales activity, where actually last week we had a median of just $469,900
for pending sales. Yeah, the tricky thing about that number though is that we know that the pending sales, as far as their list price, are going to sell for significantly more than what the list price is, at least for this round of pending sales.
They could be. So what we're seeing in Redmond, with the sales that happened last week, is that they're going for 99.4% of the list price.
Wow.
In Bend, they were 2% above list price.
Okay.
You know, but in Redmond, actually, sellers are already starting to make some concessions.
Okay.
So
Go Redmond.
So you know, just some interesting stuff here. So moving on to Eugene and Springfield, it's actually a very, very similar dynamic that we're seeing in Eugene, where we had 78 listings the past week, just 44 pending sales. So starting to see inventory increases. There are now 135 active properties in Eugene, which is hardly anything. Let's face it.
Right.
Inventory is still extremely low in Eugene, but this is more definitely than what we had in the winter, and it's slightly more than what we saw last year this time of year.
Okay.
So for sale prices, you know, we're actually seeing, again, in Eugene, we're seeing more activity at the lower end of the market than at the higher end of the market. The pending sales are going into median of $430,000, and, you know, that will probably be a little bit higher than that when it comes to the actual sale price. But, you know, basically what's happening is there's just more action in the lower end of the market. And right now, the active inventory in Eugene has a median of $485,000. So that number keeps increasing.
Yeah, that's right.
So what we're seeing is that these homes at the higher end of Eugene's market, they're sitting on the market a little longer. You know, people are still desperate to grab these sub $400,000 homes, and
right.
not just in Eugene, but they're going to Springfield, you know, of course, too, to find those.
Right.
So Springfield. The active inventory in Springfield, there's 47 active homes for sale, and these have a median sale price of $475,000, barely below Eugene.
Wow.
And this is unprecedented.
Yeah.
As long as the numbers have been being tracked, Springfield is like significantly behind Eugene, but that gap is just closing. And part of the reason is just that people are buying up these lower end homes in Springfield.
Yeah, that's right.
Because it's harder to find them in Eugene. People decide, hey, I can pay a bit less for a home in Springfield, so that starts to...
Or at least the thought is they could spend a little bit less.
It doesn't always work out that way, but
right.
that's the thought.
Yeah, well, I find it just amazing how close the median home price between Eugene and Springfield is right now. And when you factor in the, less than half of the inventory, you would imagine that Springfield's going to become even less affordable over the next few weeks.
Yeah, that's quite possible, even likely. So we'll be watching the market as we always do.
Well, good. So like Ryan was saying, we're going to take a break here, but when we come back, we're going to actually dive into some of what, on a week-to-week basis, it's hard to find a meaningful trend line, but we're seeing an inflection point now. And in both the Eugene, Springfield, and Bend, Redmond areas, we are seeing a significant shift. And we're going to talk about it when we get back. Welcome back to the Real Estate Revolution podcast. I am Kip Lohr, your host with Lohr Real Estate, and we are back with the main part of our show today. And we have some important stuff to talk about. Do you agree?
I agree. Like we mentioned earlier in the show, we're coming to a kind of inflection point where we're starting to see a definitive shift. And of course, if you're thinking of buying or selling in our local markets, then this is going to affect you. This is this is important news, and I think that we're going to spend a bit more time than usual, just chewing on the numbers and exactly what they mean.
Yeah, and I think that for me, as we're seeing this shift happen, it's just happening. It's not that we didn't see it coming. What I'm surprised about is that we're seeing it happen so rapidly. The interest rates we talked about in, a few months ago, that we anticipated rates to, go up this summer. Maybe by the end of summer, maybe by the end of the year, we'd be in the fives. And it took a month and a half to get, to the mid fives. And so in talking to the lenders that we work with in both communities, I think the consensus is that what's going on in the world right now creates a lot of instability and unpredictability. And so trying to find, any sort of like baseline to say, well, we've seen this in the past, and so we can expect things to settle down. I think we can't say that right now. And so as far as interest rates going up, we've experienced them going up a lot quicker than we thought. And we had talked about the repercussions of interest rates going up. We talked about how as interest rates go up, we're going to see buyers be priced out of the market. And we have seen that. And I think the thing that has been astonishing to me is that my anticipation of how quickly that would affect the numbers, how quickly that would affect the way buyers and sellers have to interact with each other has just happened so quickly.
Yeah, it's happened quickly, but at the same time, I'd like to throw a word of caution into there. Not to think that, hey, the sky is falling.
No. That's not what I'm saying. That's not what I'm saying.
I know, but for our listeners out here, that's not what we're trying to communicate.
100%.
Is that all of a sudden things have just flipped 180 degrees because we look at prices, for example. Prices are not even dropping yet.
No,
in any of our local
markets. Them drop.
Yeah.
I mean, and that's something that we have predicted that I'm going to stand by. I don't think we're going to see prices go down in either of our markets, the Eugene Springfield area or the Bend Redmond areas this year, or next year for that matter. We're not talking about the bottom falling out and seeing the real estate market behave in the same way that it did in during the Great Recession when the market kind of crashed. Because we're not seeing a crash in the financial markets. The profound change that I think we're seeing, and I'm surprised at how quickly it's happening, is that we have gotten so used. I mean, would you say in the last 2 years, solid, maybe even 3 years, it has been solidly a seller's market, and buyers have had to get squished into shapes that they never thought they'd be willing to get squished into to be able to get into a home. And I think really what we're seeing right now is a shift in that dynamic mostly. Do you agree?
It's a shift, definitely. And when we're talking about sellers markets, we've been in our local markets of Eugene, Springfield, Bend, Redmond have been sellers markets for, at least since around 2016, 2017,
Right.
when the needle pretty definitively shift towards sellers having the advantage. And,
Right.
What we really mean when we say a seller's market is that the amount of inventory is such that buyers are going to be in competition, for limited amounts of inventory that are available. So inventory has been limited in our local markets, but it's just been a matter of degrees, and particularly not following because we're still in the middle of it. But, when the pandemic started, that needle really started to shift even further toward buyers just having none of the power, having to really fight for increasingly limited inventory. And that trend has been continuing, and it really hit this bottom point in our local markets in the mid to late winter. Late last year, early this year, our markets had lower inventory than they ever had before. But the shift that we're talking about is that we are starting to see more inventory come onto the markets. We are starting to see a bit less competition, but
Right.
when we say a bit less competition, it's a bit less.
It's relative.
We are still definitively in sellers markets in our local markets.
Right. But so as we've talked about before, last year, this time of year, we were seeing a lot of irrational buyer activity where we would see buyers making 50, 75, 100,000, even more than that, offers above list price. And days on the market were 3, 4, 5. If you were on the market for more than a week or 10 days, then there was something significantly wrong going on. And we saw some of that right at the beginning of this year, kind of rolling into what we had anticipated, spring being a really, really hot market, and the buyer activity driving more of this kind of irrational buyer activity. And it just feels like the brakes hit a week ago. I mean, anecdotally speaking, we work with both buyers and sellers, and when you're working with a seller, you can expect, or we've been able to expect up until recently, our property's going off the market in a week, and buyers, multiple offers, and buyers willing to pay, an obscene amount of money above list price. And then, well, something changed.
Something changed, and it's been shifting, slowly but surely, where, we can talk about the trends that we're seeing in the market in terms of numbers, but there's also a kind of more intuitive level where the kind of temperature of the market or the mood of the market starts to shift. And, that's something that we can actually feel right now. It's interesting.
Right. Yeah, no, I agree with that. And I think that's, for us that we're out running around with buyers a lot and we work with sellers, and to see this kind of confluence where we're starting to see, we're not implying that buyers are going to now take the power away from sellers. But I think what we're talking about here is when you get down to the negotiation as a buyer, or you get ready to list your home as a seller, the landscape has shifted. And so the assumptions need to change on both sides of the equation, and the strategies for buyers and sellers need to change. And if they don't, they're going to get left behind.
That's completely correct. I mean, we've been in a market where the expectations for sellers have just they've gotten inflated, and deservedly so. The kind of things that sellers could get away with in the market that we've been in for the past 2 years are pretty incredible.
Yeah.
If you look at it from an objective perspective, it's pretty incredible.
Yeah.
And the kinds of compromises that buyers have to make. I mean, just the degree to which it has become so common to waive the inspection contingency is just amazing to me, because as a buyer, it's just very difficult to imagine a situation where it's really in your best interest to waive your ability to perform an inspection and know what you're purchasing.
Yeah, and the willingness to not only take on the financial shifts of coming in significantly above list price and having to have extra cash and do not necessarily an appraisal waiver, but we quite often write offers where we're creating a gap between the appraisal and what the offer amount is, as far as a buyer's willingness to come in with additional cash. And so there's all of these hoops that buyers are having to jump through, where it's not just financial, it's also, potential liability, where they're taking on a home where they're willing to kind of roll the dice that there's not something major wrong with the home. And hopefully we're seeing a little bit of a shift in that dynamic.
Yeah. And I mean, really, that dynamic is not good for sellers in the sense that, you have a buyer go into contract who's waived the inspection contingency, they waived the appraisal contingency, but when we look at the practical reality of it, there are just situations where a buyer is not going to be able to perform. And as a seller, that's putting you in an awkward position. Maybe you have a backup offer, but maybe your backup offer has found another property in the meanwhile. And it's just, you don't want to have to go back on the market.
That's right.
And, here you are having accepted an offer, which at the end of the day was unrealistic. And, you're having to scramble to get back on the market and explain to other potential buyers what happened. And there's kind of blood in the water.
Yeah,
at that
that's
point.
right. So we've been dancing around this shift that we're feeling. And part of it is a feeling in our gut, which is not very scientific. But there are some numbers that we can lean into right now that are definitely kind of validating the feeling that the wind has shifted, the temperature of the wind has shifted.
Yeah, so we talk about how, we don't want to put too much stock into the weekly numbers, but once we start to get into the more monthly kind of figures, then these are a bit more trustworthy in terms of being able to communicate trends that are happening in the market.
That's right.
So what we're seeing right now in Bend is that compared to, this time of year in 2021, buyer activity is down about 15% year over year, whereas listing activity, it's about on par. It's down just a little bit, 1 or 2%. So really, inventory, it's actually slightly higher. It's 10% more than it was a year ago. So buyers have 10% more properties to choose from, but there are 15% less people actually buying. So what that's indicating is that there is a significant shift that's happening.
Yeah, and to try to pin down exactly what's causing that, I mean, is just speculation at this point. Could it be interest rates that's driving, the first time home buyers out of the market. I think there's a little bit of that going on. Bend's a little tougher market to be having that be an explanation in of itself. And I think also one of the things that I anticipated, which I'm not seeing, is or sellers that are becoming reluctant to put their houses on the market because they don't want to be in the market with the higher interest rates. If you're sitting on a below 3% interest rate and you're looking at a 5.5% interest rate right now, there's not a whole lot of incentive to get out in the market and sell your house, even though you have an immense amount of equity in that property. But what we are seeing is an actually increase year over year inventory in Bend in particular, but also Eugene, where it's counterintuitive. And on top of that, you're seeing buyers maybe taking a beat, and maybe waiting to kind of see whether this wind is really shifting, and it is shifting. So what does that mean for both buyers and sellers in our markets right now?
I mean, it's interesting when we look at sellers. They're sitting on a low interest rate right now. They purchased their home, and they might be tempted to trade up, if the market conditions were more favorable, but they're really not right now. And I mean, that's been the case for all sorts of different reasons. We've had sellers who might be inclined to move, not putting their homes on the market because, a really big reason has been that they just couldn't find a replacement property. They couldn't find what they were looking for. So, but I totally agree that interest rates they're only adding more, they're only exacerbating that trend, that people who would otherwise be inclined in different market conditions just aren't putting their homes on the market. But, we are seeing inventory increase. So sellers clearly, they are putting their homes on the market, and we are, seeing just in the past week or two, this big spike in terms of listing activity. So, it's really speculation at this point, what exactly is happening there, but do you maybe have any ideas?
Well, I think the main takeaway that I would like to talk about is less about the ideas that I have and more about the uncertainty that we have moving forward and the prognostications that you see nationally, and then even the ones that we can provide you as being local, on the ground troops that are, trudging through the trenches of these markets. I am feeling less certainty about being able to get a thumb or a finger on the pulse of what's going on right now. And I think probably for me, the word of the day is being cautious about jumping on one theory or another, and being able to kind of look at this current market with a lot of skepticism. And so what it really means, I think, is both buyers and sellers have to be more in tune with what it is that their plan is, and executing a plan based on the circumstances that are on the ground right here and right now, rather than trying to make decisions based on what they think the landscape could look like by midsummer or fall or by the end of the year or by next year. I think that there is too many factors going on in the world right now to be able to have any sort of like reliable finger on the pulse or magic 8 ball that we can look at where we can say, okay, it's likely to head this way or likely to head that way. And so maybe waiting is a good plan, or maybe pulling the trigger right now is a good plan. And so I think really people have to get in tune with really what it is that they really want to be doing right now, and really have to rely on what they have right in front of their face right now.
That's really true, and I've mentioned this before that we're not fortune tellers.
Yeah,
And that's really not what we're aiming to do. I mean, we are a little more bold than maybe some other folks out there in our willingness to actually make predictions. But really, what we're doing is we're just calling it like we see it. We're looking, okay, we're saying this is what the numbers are showing, and this is what this could mean moving forward. But it is so important to clarify what you're clarifying, which is that the decision to purchase a home or to sell your home is really such a personal matter. And of course, you want to be informed by the dynamics of our markets, by the different factors which could influence your bottom line in making that decision. But at the same time, to really understand what the right decision is, it's a really personal process that you have to go through.
Yeah, and you can't operate out of fear. I think that the FOMO, fear of missing out, a lot of buyers have operated under that type of fear, and sellers holding on to their properties, fearing that if they sell them right now, then a year from now they're going to be worth $100,000 more, and they've missed out on that opportunity. And so there's another, I guess that's a fear of missing out as well. And so I think the uncertainty that we're seeing, well, I think really in our prognostication, I'm just amazed at how quickly some of the things that we've anticipated happening have come to fruition. They're just happening quicker than I had anticipated. And so to be able to look at what next year is going to look like, for me, the constant that I feel like we can lean into is that we're not going to see prices go down within the next year or two. I'm willing to stand on that pretty firmly. But as far as how that informs your decision today, I think you got to be looking at what interest rates are today, what equity you have built up in your property today, and whether or not the need of making a move either to purchase or sell is appropriate for you and your family right here and right now.
Yeah, and that's the exploration that we try to go into with our clients. That's
right.
It's this personal process. It's a matter of us getting to know you and having you ask yourself, the questions that you need to ask in order to really start to discern what the right path is forward for you.
That's right.
And your family.
Well, I think that's it for this week's show, other than we are going to come back with the final segment of Kip's Tips. And I want to thank you for being in the studio today and getting us through some of these numbers. Any final thoughts or words before we take a break?
Yeah, well, I mean, just to just put a little bit of context behind this, this statement that we don't really see prices going down. That's really not what we're seeing right now. So over the past month, median sale price in Bend has been $770,000. So it's a little bit lower than the peak that we saw in February, but really the prices aren't budging. And in Eugene, they're actually on a steady upward trend where in the past 30 days, we've seen a median sale price of $475,000. And in Springfield's market is super active right now in terms of buying activity. We aren't actually seeing any less buying activity in Springfield than we saw a year ago, and there's less listing activity, so more competition. So really, when we talk about this shift happening, it's just important to put into context where it's
local.
It's local, and it's also a kind of shift that's happening at the periphery of things, where the kind of general picture, it isn't shifting all that much, but we're starting to see something happening. So it's our duty to report that to you as we see it, but not to kind of blow that up too much, I think.
Yeah, and I think the takeaway is that we're continuing to see prices go up, and we are going to continue to see prices go up. But when you talk about them in a year-over-year basis, like Bend was 25% year-over-year, correct?
It's 26 from
20 okay.
Through 2021. Yeah.
We're going to continue to see prices to go up, but not quite at that level. So we talk about things flattening out and plateauing a little bit. I think we're starting to see the beginning of that process.
Definitely.
All right. Well, we'll be right back with our latest episode of Kip's Tips. Welcome back to the Real Estate Revolution podcast. We are in the home stretch. I am Kip Lohr, your host with Lohr Real Estate. I have Ryan Neal in the studio with me as always, and we are on to Kip's Tips. And for this week, our tip is going to be for sellers, and we're going to talk about, well, it's an unpopular subject in my industry, in our industry, for real estate agents to talk about fees, negotiating your commission with your listing agent. And first of all, I want to say there's a lot of misunderstanding about how real estate commissions work. So I'm going to give you a quick little primer on that, and then the takeaway is going to be you can negotiate fees, and it's not a bad thing.
Shouldn't have to be a scary thing.
Shouldn't have to be a scary thing. And so essentially we have buyer's agents and seller's agents. We have agency. It wasn't always this way in our industry. We used to actually all be working for the seller. Sellers would hire a real estate agent. Buyer's agents were sub-agents for the seller. And so when there was a commission being paid, the seller was paying a commission to the agents that were working for their best interest, which happened to be both the agent working for the seller directly and the agents that were working with buyers, bringing them to purchase their home. And so laws changed. I'm not going to go into the details of that other than say that we now live in a world where there are buyer's agents that have an agency, a fiduciary obligation to the best interest of buyers, and same thing for sellers. And the fee structure has not changed, however. So a listing agent, an agent working for the seller, is going to sign a contract with the seller to sell their home, and they're then going to agree to pay a fee to an agent that brings a buyer. And a lot of sellers don't understand that exchange that happens. And so when that exchange happens, you've got to incentivize having a buyer's agent bring you the buyer. And maybe back in the old days before the internet, we kind of controlled the flow of information. Buyers didn't know that your house was available unless an agent knew that your house was available and brought them to your house. So today we live in a world where the real estate commission is something that has always been something that you can negotiate. And I would say for sellers in these days, don't be afraid to ask your agent to negotiate these fees. What do you think of that?
Yeah, I think that, certainly a discussion about fees should happen. It isn't just to be taken for granted that 6% is the only way that it is, because it's not. And, particularly in our current markets, we're seeing a broader spectrum, I think, of, commission splits on properties than, we may have seen, not too long ago, actually.
Yeah, and as we see the market getting tighter and the margins getting thinner and thinner, especially from a buyer's side where, it's getting harder and harder from affordability standpoint, I think it's time to pull that Band-Aid off and make the recommendation for sellers. Feel free to negotiate fees with your agent. Well, that's it for this week. Thanks again, Ryan, for being in the studio with me. And next week, we'll have another great show for you. And in the meantime, have a great week.
Thanks, everyone.
Thank you for joining The Revolution. We are over and out until next week, when we'll continue to fill you in on all that matters most in our local Bend and Eugene real estate scenes. See you next time on The Real Estate Revolution.